Welcome back, traders. This is our weekly gold market review. Gold's price continued to be on the back foot in the most recent sessions and has traded nearby the 1700 barrier. As the downward trend has become steeper in the latest weeks, this report will be looking into the possible main drivers of gold's price at the moment and what the upcoming days may have in place for traders. A detailed view of the price action will also be carried out through our technical analysis at the end. Lately, the main focus of the market has been placed on the strengthening of the US dollar. The greenback was lifted to a 3-month high in the most recent sessions according to the dollar index. Usually, the yellow metal has a strong negative correlation with the US dollar. Thus, the latest gold price drop could be due to the demand for greenbacks. Also, in the previous week, important financial releases from the US seemed to favor other instruments over the precious metal. US manufacturing and factory data for February and January accordingly saw improved numbers. Also, the US employment report was a success, with the non-farm payroll exceeding market expectations and the unemployment rate moving lower once again. The data was rather encouraging for the US economy, and the support for the greenback was legit. Yet the economy has a long way to go before reaching pre-pandemic levels. One of the most encouraging updates for gold traders that has captured the market's eye in the past days is the forecasts of inflation. According to US Fed official Lyle Brainard, in a report released in the previous week, forecasts of inflation levels accelerating have reached nearby the Fed's target of 2%. Americans' expenditures are expected to increase substantially, and prices of key goods and services could possibly rise at the same time during the next year. Gold in this case comes in very handy for investors or traders looking to profit from economic circumstances. Yet this could be a more medium-term view stretching into the next 6 months. The overall outlook of the US economy seems to be improving drastically, however. At this stage, the vaccination process continues to run smoothly and on a fast pace. Moreover, the US government willingness to increase fiscal stimulus and the Federal Reserve keeping interest rates low in the long term are both contributing factors to economic expansion. On the contrary, some analysts insist that the large fiscal stimulus package prepared by the Biden administration is worrying the markets. It is also said that for this reason we could see US bond yields being on the rise. Joe Biden's $1.9 trillion fiscal package may be too large and create other difficulties for the US economy in both the short term and long term. This could burden both the budget deficit and national debt figures. As a closure, in the upcoming days, some US financial data could be of particular interest for gold traders, as they could create strong volatility upon release. On the 10th of March, we get the US CPI rates for February, while on the 11th we get the initial jobless claims figure, and the US Federal Reserve will be releasing its quarterly financial accounts. Finally, on Friday the 12th, we get the preliminary University of Michigan statement for March. Moving now to our technical analysis, please note this is gold's 4-hour chart. After dropping to a 9-month low on the 8th of March, the precious metal has seemingly bounced off the S1 1680 support level and is currently aiming at the R1 1715 resistance barrier. The S1 line was tested various times in the past week but was not breached to the upside, probably being considered as a strong level by traders. In an upward momentum, the R2 1735 barrier can also be found higher, while the R3 1755 hurdle is at the top of the chart and was last reached on the 1st of March. If the possibility of a new downslide for gold's price arises, the levels below our S1 1680 line are the S2 1660 level and even lower the S3 1640 point. Please note, after a period of 10 days, the RSI indicator engaging the 30 level constantly, it has finally ascended higher, confirming the most recent move upwards for gold's price. Please note the latest jump could be a result of some recent profit taking, and the overall trend line of the yellow metal remains downwards in our opinion. Now that's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please feel free to share or subscribe. Until the next time, friends, enjoy solid trading.